Hello and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Srikanth, joining you live from India's startup capital, Bangalore. And Krishna, it's quite a festive Friday today. So here's wishing viewers celebrating Ugadi in Andhra, Karnataka, and also Gudi Padwa in Maharashtra. Really wishing them a very happy new year.
Absolutely. Here's wishing the first set of New Years that are being celebrated. Tamil New Year is coming up soon as well, Chandra. You would know. So, Happy New Year to the entire country. Let's start off this brand new year with the brand new edition of ET Now Startup Central. First up, a check on the headlines. We kick off this Friday with a big voice on the show. Ashwath Damodaran, a globally respected voice on valuations, shares his take on Indian startups and what they need to do in the current environment. Who raised what this week and how does it fare compared to the lackluster week before? Find out on our weekly funding meter with Venture Intelligence. Startups have a royal date in Mumbai on Monday with the Duke and Duchess of Cambridge. More details coming up on the show. On our special segment, The 3 Mistakes of My Life, we get you Practo's founder Shashank ND, who talks about the 3 mistakes that startups usually make.
Krishna, straight to the top story then, and as you said, we have a global voice, a big voice on the show. We're talking about Ashwath Damodaran, a globally respected voice when it comes to corporate finance and valuation. He is a professor at the Stern School of Business at New York University, and really the last word when it comes to issues such as valuation. And he spoke to ET Now on valuation around startups in India, and also, what the current environment means. He attributed the climb down in funding to a global phenomenon, but he also said that startups have to start walking the talk and make money. Let's listen into what Ashwath Damodaran said.
Anytime you have young startups in a new business, and many of the startups in India are tech startups, so this is a global phenomenon. It's not an Indian phenomenon. What you've had is 5 or 6 years of easy money for these startups. So basically, you created an app. You could go out and raise 10 million, 50 million, 80 million because everybody looked at the market and said it's a big market, therefore there's lots of potential. I call these bar mitzvah moments in markets. And among the Jewish people, bar mitzvah is the day, so when you get to be 15 or 16, you're told you're now grown up, you have to behave like a grown up. For these young tech companies, that bar mitzvah moment is coming, which means that markets are not just going to be happy with downloads or users. They wanted to see if you can make money. And it's natural. It's part of the process of growing up. So I think you are going to see some of these companies fall to the wayside because they're really not businesses. They're just tech apps. They have not figured out a way to make money. So I think it's natural. It's the way in which markets grow and step back. It's 4 steps forward, 2 steps back. So in the larger scheme of things, I think this is something you should expect, that you're going to see some kind of retrenchment in venture capital coming into these companies simply because I think that people have become over-optimistic.
Krishna, I think what really stood out for me there is that, this is the bar mitzvah moment for startups, which means that they have to grow up and, beyond being tech apps, they really have to show how they're going to make money going forward. But I guess money is what we'll be talking next in our weekly funding meter, won't we?
Before that, I'm not sure how many people in India understand bar mitzvah, but you can call it baptism by fire for Indian startups, and that way more people can understand that. But time now, as you rightly said, for our weekly funding meter. And we have, as usual, Arun Natarajan from Venture Intelligence joining us to give a 360-degree perspective of all the funding action in the week gone by. Arun, good to have you on the show again. Tell us, how has the funding trend been this week? Has the new financial year then begun on a positive note after a really lackluster first quarter?
Things definitely look better this week, and we've seen something like $44 million or roughly 300 crores being invested across 7 companies this week. So it's indeed been a good week. And clearly the investments were led by the $25 million investment raised by mobile entertainment company Hungama, and there you had a strategic investor like Xiaomi come in and to lead the round, along with participation from existing investors Bessemer, Intel, as well as Mr. Rakesh Jhunjhunwala. So that clearly led the investment pace this week. And we also had, interestingly, the next three venture investments all had some kind of healthcare, wellness, beauty kind of connection. So we had, serial entrepreneur, Mr. GSK Velu of Trivitron. His family office led a $12 million investment into a dental chain kind of company which supplies into dentists and called Lexer Lab. So that investment was followed by a $6 million investment which was led by L'Occitane into a company into the aggregating beauty services MyGlam. So and then you also had a couple of other investments in the consumer internet space, making it in total a pretty good week.
Arun, you covered the VC investments, but take us through the M&A investment that happened this week by Future Group. They've bought out an internet company, haven't they?
Absolutely. So as we all know, the Rocket Internet Group, has been kind of looking to divest some of its portfolio companies in India, and Fab furnished their first exit in the online furnishing kind of space. The interesting part is obviously there have been a lot of tussle well covered in the media between the Future Group, which has been a pioneer in the offline retail space, and the new kids on the block, the online retailers. So this, ever since clearly marks the fact that Future is not ignoring the online space, and very, very interesting is the fact that they are planning to integrate their existing brands in the furnishing space into Fab Furnish, and that clearly indicates how strong and how quickly online brands get created, and this is kind of an acknowledgement by the Future Group of that.
Arun, I want to ask you, we're also seeing this trend of companies co-investing with angels and venture capitalists. Take us to the rationale over here. What exactly is the win-win that we're looking at?
Yeah, it's actually quite interesting. It's not just the Xiaomis or L'Occitanes, who are doing this at the later stage. We are actually seeing at the very early stage, and in fact, even the first round, both corporate strategic investors as well as angels co-investing with VC firms, and these are not necessarily, seed investors looking for money support from strategics or angels. This is even big, well-capitalized funds like Sequoia and Axel, who are actually actively partnering with the angels and strategics. So for example, we looked at the Q1 2016 data. As many as 30% of the investments in the first round had one angel or the other participating. And similarly in the case of strategics, we saw at least 12% of the investments in Q1 having one strategic investor or the other. So the reasons obviously are different. In the case of why VCs are co-investing with angels, there the reason is, they really want, these funds are pretty large, and they want to look at, sharing the smaller deals with angels so that they can handhold the company until they're ready for bigger rounds of funding. In the case of strategics, that's a dynamic is slightly different. So if you have a Foxconn, they bring a different flavor in terms of manufacturing to the startup, which obviously a VC cannot do directly. But obviously the VC has the ability to help the company raise the next round. So the dynamics are a bit different. It's very clear the VCs are willing to partner with both these segments, angels and strategics.
Finally, Arun, if there's one investor group that's been pretty much consistent in these funding meters, it's clearly the angel investors. I mean, what trend are we seeing there? Few deals trickling in this week as well. I mean, amidst all the uncertainty, if there's one constant, it seems to be angel investment, isn't it?
Absolutely. Angels, have been consistent right through, while the rest of the ecosystem has been up through ups and downs, and VCs are really focusing on existing portfolio before they commit to all new companies. The fact that angels and also family officers to that extent have stepped in has really helped the ecosystem maintain that kind of balance until the VCs are ready to kind of pick up the thread when they have more bandwidth rather than money. The money is available. Today I would suspect the VCs have less bandwidth than it's an issue of money.
Arun Trajan of Venture Intelligence, thank you so much, as always, for taking time out to be with us here on 18 Startup Central and giving us a roundup of all the funding action over the week gone by. Moving on to my favorite story of the day, Chandra, and you have more details on it. It's not just the world's largest venture capitalists and hedge funds who are smitten by India's burgeoning startup ecosystem. The latest is none other than the Duke and Duchess of Cambridge, Prince William and Kate Middleton, who will be in Mumbai next week to attend a startup pitch event. Chandra, tell us, what can we expect from this royal visit?
Krishna, we're giving it various adjectives. We're calling it royal date, royal pitch. I mean, call it whatever you want, but this is going to be significant because from what we are picking up, there is going to be a young entrepreneurs event organized by the UK Trade and Investment on Monday. It's a pretty closed door event, and from what we understand, there will be select startups who will be pitching to a jury comprising the who's who of India Inc. So, this is going to include names such as Anand Mahindra, Saurabh Srivastava of Indian Angel Network, as well as Mohandas Pai from Manipal, and the Duke and Duchess of Cambridge will be giving away prizes there. And we also understand that there are also going to be a bevy of venture capitalists from the UK who will be part of the event. So, association members from the Venture Capital Association there, various funds, all of them are going to be in attendance. I guess everyone wants a piece of India's startup ecosystem, not just investors. I mean, this week itself, we've spoken about Capgemini, we've spoken about Oracle, and now it's no less than British royalty.
Chandra, it's interesting. Wherever Prince William and Kate Middleton go, it's them who grab the attention over what actually is being discussed wherever they go. But this seems to be the other way around. Hopefully, at least, that this ends up being a big boost for the Indian startup ecosystem, and not just another royal visit story that is covered by not just Indian media but the world around as well. On that note, let's also get a check on all the latest that's buzzing in the world of startups. Regulatory concerns continue to haunt cab aggregators after Karnataka government barred Ola and Uber from charging surge pricing. Maharashtra is considering a similar move, while the Delhi government has warned them from charging exorbitant rates during the odd-even scheme starting the 15th of April. Now, the move is likely to have a severe impact on cab aggregators at a time when they are burning cash in a fight for market share. Former Google head honcho Amit Singhal has joined the board of Goki, the fitness startup. Singhal had retired from Google in February this year and is credited of being the man behind Google Search. Now, Goki, founded by Vishal Gondal, who had sold his previous venture, India Games, to Disney for $100 million. It also counts Singhal as an angel investor. Social networking giant Facebook is testing its hyper-local services website here in India. Consumers will be able to book for services of plumbers, spas, photographers, event managers, among others, across 10 categories. FB's plans comes at a time when hyper-local startups have been struggling to cut costs and reduce cash burn. Other players in the space include the likes of Urban Clap, Sulekha, Quicker, and Just Dial. And with that, it's time now for our special segment, 3 Mistakes of My Life, where we have Shashank ND, founder of healthcare platform Practo, sharing with us the 3 mistakes that you can avoid as an entrepreneur. Listen in.
I think 3 mistakes that usually entrepreneurs make is the first one would be to chase capital. I think that entrepreneurship is all about passion. It's about something that you are ready to do even if you don't make any money from it. So it's extremely important that people don't chase capital. They just focus on what they are doing and capital will chase you. I think if you put in good work, that's probably the best marketing for your startup, for your idea. So try to make as much progress as possible on your idea and on your startup, and not get distracted by capital. The capital will always chase good ideas and these things. You don't have to reach out. The second mistake that usually entrepreneurs make is that they feel that when they hear too many no's, that it's probably the wrong idea. So for example, when I pitch this idea to 10 people, 9 of them would tell me that this is a bad idea. So it's extremely important to not be dissuaded by hearing a lot of no's, or by I think it's very important to stick and to believe in your vision, and to believe in your idea, and to work hard towards it. And I think a lot of times the ideas that 9 out of 10 people say no to are the ones that are worth trying, because they've not been tried enough and they succeed. Of course, you have to apply your own logic to it, but you don't have to be dissuaded by the no's that you hear all around you. And the last mistake that I think people make is they overanalyze before starting off. There's only so much that you can analyze before starting a company. Most of entrepreneurship is about discovery, and the discovery happens as you get deeper and deeper and deeper. So once you have an itch, once you have a small itch, my suggestion would be to deep dive into that, and to start going deeper and deeper into that idea through implementation, through execution. And as you go deeper and deeper, you will realize the pitfalls that particular idea has, and you can then move on. But I think over-analysis also kills many good ideas, and that's why they say that the graveyard is probably the richest place in the world, because it has so many dead ideas, so many ideas never implemented, so many musicians who never took their talent seriously. So I think it's very important to take your ideas to execution and then see them win or fail.
Krishna, some very important takeaways coming there. I mean, not just for entrepreneurs, not just for startups, but for all of us. And I think especially the part where he spoke about over-analysis applies so much. I mean, sometimes I guess it's, just try to take that leap of faith, have that courage of conviction, but some very inspiring
Chandra,
words
how is it
coming
possible
from
that I
Practo,
was thinking about the
which is
same
clearly the
takeaway
next
that you
big
thought
step.
about just now? That over-analysis bit, I
Great
think
minds think
that's a
alike.
disease when it comes to both of us.
Right, Krishna. And with that, let's go on to the final segment today, Number Crunch. And the number we are crunching for you today is 250,000. Now, 250,000 sounds like a huge sum. And believe it or not, that's the total number of applications for the H-1B visa that the US government has received so far, according to a PDI report. Now, remember, the actual quota is just 85,000 visas. But usually what happens is companies apply in excess to ensure that they get a fair share of visas when that automated lottery takes place. Now this is important because remember, it's coming at a time when H-1B visas are under fire in the US. A lot of politicians are saying that, Indian companies are taking away US jobs because they corner a majority of these visas. And we've had India's tallest IT leader, N.R. Narayan Murthy, also saying that Indian IT companies are acting as agents of immigration in doing whatever it takes to ensure that their employees get visas and green cards. So I guess we'll have to wait and see what happens. But Krishna, I'm willing to bet that this year around as well, Indian companies will end up cornering a majority of those visas.
Chandra, not just that, I'm guessing a majority of those visas will be cornered by Bengaluru alone, if I'm not mistaken. I wish we had that number of how many of that 250,000 applications.
Bengaluru, Chennai and Hyderabad.
Okay, fair enough. Bengaluru, Chennai and Hyderabad. I was about to say the south, but Bengaluru being the startup capital of the country and the tech capital of the country, I'm guessing between Bengaluru, Chennai and Hyderabad, Bengaluru will still top that list. But on that note, we will need to wrap things up here on this edition of ET Now Startup Central. But don't go anywhere. Keep watching ET Now. Coming up next is Market Watch.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.